The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, everyone. Basil Chapman sitting for Steve Rhodes' hour. I'm not doing Steve's show. Only Steve can do his show, but I'll be doing we have a lot to look at. So let's just run it. This is Thursday, I keep saying Wednesday. Thursday, the 15th of May, and we're looking at 11:06 a.m. And what have we got? We've got the Dow, which was down quite sharply earlier on at 41,777. Is now at 42,026. Made a peak E at 42,057. Let me just show you this for those of you who are new to my technique. I try to identify the lowest low bar and then count each successively higher peak. Come on, there you are. Okay. So I try to identify the lowest low bar. We've been very fortunate, and many times we've got major lows. We're still along from the low in the Dow of 2020, still long in the 3 times long as well of the for the 2022 October low. And we got the actual low this time on the 7th, but then we got stopped out, and then we got back in, and we are long, and we've been long for a while now with the Dow. We're looking at identify the lowest low bar. Each successively higher peak is alphabetized, A, B, C, D, E, F, G. You know, Steve does this. He calls them number 1, number 2, or peak A, B, C, D. He's automated it. I have attempted to automate it a number of times. I'm now going to be working with it in ChatGPT, so I'm getting a little closer, because there are certain times where the waveform doesn't quite conform to the just simple ABCD. And then what do you do with D is the question. So that's something I'm working on. So every one of the notations you see on the thousands of charts I have, and the ones that I have to redo, like last night when I suddenly had to shut down and couldn't save something because you couldn't open the platform. You just had to close it. And then I had to redo some of the notations. So I try to identify the lowest low bar after peak A. How it takes out peak A and starts leg B is very important, because that's where it can be upgraded from a buy signal to a buy mode. If it does that, it says it should go to at least 4 higher peaks. That's the obligation of the Chapman wave. That's one of the beauties of it. Simple A, B, C, D. Then you have to do a little bit of work, but sometimes you just continue the notation, E, F, and G. But if within 3 bars, and we'll talk about that, that peak D is surpassed, then you think E, maybe E/A, alternate count, because it's really like the start of maybe a brand new buy mode to the upside. All right, so where are we? We've gotten the low right there of the 7th at 36,661. We've gone to a peak E, but there's a chance that that's an instant restart. I always put in this little yellow circle right there to say, hey, watch it, because once we take out, if it pulls back and goes underneath the trough of D, it negates that. But if it holds and within 3 bars, it takes out that peak D. It did that in 2 bars. So far, this is very positive. But look at this. This is the S&P. This is fascinating. Why? Because the S&P is down just 5 points now, 5.90. Let's call it 6 at 58.86. And it's at a leg D already at 5906.94. And that was the high of 64. I knew there was something wrong. 5906.64, not 94. That was 2 sessions ago. So yesterday did make a peak D, right? What if, this is a big what if. What if there's a higher high today above 5906.64? Well, that means that you've got 2 bars, and this is if it's today or tomorrow, it means you've got a chance of an instant restart. I don't want to put it in right now. D is your objective. It got there. Look at this beautiful weekly leg A, but the pink 9-period moving average hasn't crossed positive. The MACD hasn't crossed positive yet. The stochastic is good at 60% on balance volume. The blue line is not so bad. The monthly chart is fabulous. So where are we? We're in a buy mode, and it's very strong. What happens in the next 2 days is very important. I said that we should consider that over the next, this is 2 days ago, that we're going to have a little bit of a digestive phase over the next few days. Well, have a look at this. The Dow, as we're speaking, has just climbed to a plus 13 at 42,065. I mean, this is the power of this particular move. It just keeps coming in. I do suspect that we're going to run out of the market's going to get a little bit tired of saying tariff on, tariff off, tariff this, tariff that. And therefore, I'm looking at probably in June, there's a much bigger digestive phase. That's kind of what I'm looking at. So let me do this. I'll run the numbers real quickly. So we've got the S&P coming back quite nicely. It's still down, but it's only down 268. The QQQ is now only down 50 cents, having made a leg E, but there is an instant restart right there. Now, I don't want to go into this. I did it in my show, but I want you to say the greater the move up without a bit of a rest after an instant restart just think E, F, and when you get to the G, you put G/C, meaning there could be a pullback, and then it goes to a D. But look at this. I drew this in a little while ago. Here's a Chapman falling axe formation, but it did take it out over there. But I just did this as a kind of, all those bars, every one of those gave highs and says, you can legitimately consider that this is a trend line. So if the S&P by, Thursday, by Monday or Tuesday is actually trading this, the QQQs are trading above 525, that is really strong action. Okay. And the key support now is at 5. It's a little different now. This bar, the low of this bar on the 13th was 508. Yeah, I'd say 508. Anytime in the next 2-3 days, if it goes below 508, you've got to be a little careful. IWM coming back a little bit down, only 6 cents at 206.72. Went right on the 200-period moving average. I love these. I have these techniques that I've used, developed over the years, and they just look at this. It was such fantastic support all the way through the December into January lows, and then you ran up to the 230 level in the IWM and took out this double bottom at the 213s, and it went straight down to 171.74 on the 9th, not the 7th. On the 9th. And the 7th was the major low for most of the indices. And now it's gone to this leg F. This is not, because it's 1, 2, 3, 4 bars. It's not an instant restart. You could get a down arrow and up arrow, but in the meantime, look at the resistance here. The 200-period moving average is now very strong resistance. In May, anytime going to the end of May, if there is a close above, say, 213 to 215, in that area, that'll mean that you've turned the 200-period moving average not into a repellent zone, but a support zone. Right now, it's a repellent zone. Let's keep going. We want to talk about, I'll just do this quickly. Gold was up a little bit. It's up 24. I went to the Chapman Wave Insight, another technique that I developed, where I have 2 parallel lines, narrow lines. It's called the inside track. This is a propellant zone on the way down. And look, we held it and we've turned up. And look at the GDX. GDX went almost to the level that we were looking at. Actually, I meant to put this up there. That's where it is. Okay, right there. That's where it is. So it went right to that particular support line, took it out by a fraction, and now it's trying to bounce. But I think the GDX is in a sell mode, just like in the daily chart, just like the gold itself, contract itself. I'll be right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Yeah, we're back. Basil Chapman, this is not Mastering Probability, Steve Rhodes' show, but it's Steve Rhodes' hour. He's away. I will be away. Tomorrow I'm doing my show. I forgot to mention it before. At 8 a.m., 8 to 9, and recording it for replay. And then next week I'll be away from Thursday, the 22nd, back on the 28th, and do the show on the 29th. So Thursday to Wednesday of next week, I'll be away. So let's look at this. We're looking at the E-mini. Just, oh my, look at that. Peak A, this is notation A, B. Remember, I'm doing this by hand. Steve has it automated. I would love to automate it, but there is a technique. There are a number of techniques within little subtleties that I use that just I need to know that I can get it in a different way. So I do it by hand. I have not found it, at least to do the alternative counts the way I want it. I hope to be able to do that over the next couple of months as I'm going to ChatGPT, but it's a work in progress. So what we're looking at, a very strong move up in the futures, E-mini. And let me just get you this for the moment now. So as I was saying, so look, this is Deere and Company tractor farm equipment, all-time high. As we're speaking, it hit 531.54. I mean, Caterpillar. I mean, the reason why we've been long for since the April 7th low, we had been long before, and most of our positions actually held very well. One of the things that's really important about this is that we are looking at GC. Even Caterpillar's come back strongly. Now, these are different areas. Caterpillar is big cyclical in the U.S., heavy-duty equipment. Deere is commodities. Look, we've got the DBA. We've had it forever. DBA is the DBA Agricultural Fund. Done very nicely. Look at this. Trading at 27.13. We've got it from the 13s. We've had it for a couple of years. Still doing very nicely. Agricultural Fund. So, okay, now let's get back to the questions here. So I needed to do the TLT. TLT is trading up 70 cents. Retesting that low that was made in the 84 area, 85, I believe. but it has held. So far, didn't I just do this, or did I do the bonds? I hope I did it with this. No, I did it. Did I not finish? Oh, I did it last night, and then it got cancelled because all the work that I did, because the whole thing about TradeStation, it has fantastic tools, but it doesn't save automatically, and that's a great shame for me, because if I forget to save, not just click save, it has to go to it's a whole parameter, a whole series of things. I lose that information that I've done all day, like yesterday. I had to redo a whole bunch. I don't even remember what I did, because I do it on the fly. So look, here's your dreaded H. Yesterday was the test of this low that was made on the 11th at 85, round number low. Did you not put that in? Oh, I did it last night, right. 85 round number. I'm always looking at lows, round numbers. And what did it do yesterday? Went just above that. So it's trying to bounce here. But the way it's looking is, I did it in the weekly chart. There it is. The way it's looking right now, you've got to monitor this very closely. That's the yields. But I'm not going to worry too much about yields, because I think the market's on its own trajectory. It is looking at... Did you just do that? You did, huh? Round number low. Okay. So let's just do this TBT. Look at that. Double top-ish. We'll see what happens. All right. Now, let's go to crude oil. Crude oil right now is trading down $1.95. I mentioned yesterday, I just didn't like the look that it could deflect lower. But if you're interested in it, you had to put a tight stop in. I just don't see this as the place to be. Okay, now talking about places to be. So I didn't finish in my show, the Tiger Technicians Hour, a bunch of questions that came in. And then I said, I've just organized to be able to do the next hour, because there were so many questions. And I've just been able to free this hour up. So there are things that I forgot. Let me just review. We were looking at Palantir. So Palantir has made that peak D. Remember, the objective in the Chapman wave is to get you to at least a D in a buy signal to upgraded buy mode. Well, there it is. But it had 125.41 high of back in February. Then it slumps to 66. It's cut more than half. And then what does it do? It comes back to 125.25 at peak C, pulls back, does the left side, right side price time match. This is a technique that I developed years ago. And then it runs up to a D. And it's holding quite well today. It's down $1.90. So what I've been saying to subscribers is, and we've tried to do this, in this particular phase, I think it's going to change in June, but for this particular phase, I want to be, for subscribers, in what's working. Because I don't want to sit there saying, it could work, it's there, and then wait, and then it turns out to be fantastic when we've got, what's working right now. Palantir is working. So every big pullback, you want to treat it as at least a buying opportunity until it changes course, until it starts to break. The green 9-period moving average flips pink underneath the 14, says, okay, now you've got to watch out. So far, it's all very strong. Look at GE. GE is at all-time highs as we speak. At up 424 at 227, it's at look, leg E. Is this an instant restart in the month? I don't even want to talk about this. Is this an instant restart in the monthly chart? You went from a D, and then within 2 bars, not 3, but within 2 bars, you've just gone to an E. Is that E/A? I don't want to go there, because it's the weekly chart that says, is this an E or an A? When you took out the 159.60 low of the week of the 27th of December in the Chapman wave, you went to a D, and then you come back and you take it out. That means if you go below 159.60, that's called, it's like a restart in the Chapman wave methodology. When you're coming off a low, you can go to peak A, then fail, and then come back, but hold the low, and then go to another A, and then even make a lower low. And then if you take off and you go to B, that can be a really powerful move to the upside. So this is at 159.46, only 6 cents below the December low. This is a brand new buy. Oh, I can't believe I'm saying this. This is, in my work, I have no choice but to consider this as an A. That means it should, and it's a buy mode because it's at a new high in a single move. Stochastics at 82%. That's what you want. MACD is good. 9's over the 14 in the weekly chart. That means that there should be peak A in the weekly chart, and higher peak B, a higher peak C, and at least a peak D. Well, We're long, and all I can say is that we're going to try to stay long as possible, because that's what I'm saying. You've got to go with leadership. Robin Hood was a leader. I was asked about that, and I said, Robin Hood's pulling back. If you need to get in as a fresh move, well, the low today was 57.60. I was saying in this area going towards the 55, 53 level. That's kind of where I want to be looking at it. If it doesn't get there and it holds today and it starts to move up, maybe this is the recycle. That's an E/A. I don't know, but all I'm saying is that this cup formation, I've drawn this in. I have to redo it again. Man, when you lose notation like that, such a pity. So I'm so pleased that Steve's able to, I did this. I remember doing it last night. All right, well, I have to do it again. Anyway, so Robin Hood, for us, we've been long since the 16s. We've had other positions, some have worked, some have not. But most importantly, we still are looking at this as a leader, and that 66.91 all-time high is the target in this particular phase. I'll be back. We've got a lot of stuff to talk about. Oscar's one of them. Eli Lilly, Amazon. I'll be back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
All Hi folks, we're back. Basil Chapman sitting for Steve Rhodes' Hour, and I'm doing with my shows the Tiger Technicians Hour. My service is the opening call, daily newsletter, a very intense newsletter, and thorough, let's put it that way. And then on Friday afternoon, usually Friday afternoon, I do an overview for about an hour, maybe an hour. It's like a webinar almost, but I just haven't been able to put together things for a public webinar. So I am considering one of those intraday, really a full session where I discuss Chapman Wave methodology, and I do it live. Look, I was just discussing the Chapman Wave methodology in terms of the instant restart, Chapman Wave technique that I developed years ago. So have a look at this. So at the 200 period moving average, it's fantastic support in the 1 minute E-mini. What does it do? It goes to peak A, right there. You have to surpass it, in this case, by 25 cents because it trades it. So that becomes a B. You got to surpass it. You didn't. And once you do this, so it's a B until you take it out by 1 penny. In this case, it's quarter points because that's what the futures trade at. It takes it out. That starts leg C. It becomes a peak C if it makes a lower high. Then it goes to a D. Wait a minute. Weren't I talking? I was talking about the Chapman Wave methodology of the instant restart. That at a peak D within 3 bars, if it takes out D, think alternate count E/A. But if it goes really sharply higher, you can just use the alternate count. And when you get to the G, it's going to be a G/C, and then you should expect still a moment's hesitation and get to a D. Well, this went 3 bars, 1, 2. The third bar went to a leg E, think E/A, pulls back for 4 bars. Fifth bar goes up, and it goes to an F, I think F/B, and then it goes to a G/C, because that's what I normally do. And because it's gone straight up, I think, well, the 9-period moving average wasn't even breached. It's such a powerful move. The MACD hasn't been breached. Could it go to a G, pull back, and then go to a D? Well, let's see what happens. Yeah, that's exactly what it does. And it goes to the D, and now you've got a moment's rest. So what I'm saying is, with all these stocks and indices that we're looking at that have made their peak Ds, if within 3 bars they make a higher high, and some have, you got to think alternate count. There could be a brand new buy signal to buy mode going to another 4 peaks higher. In the indices, I don't believe I'm even saying this, but that's a possibility. But in the meantime, if they take out the trough after D, that means it's all over. You have to start fresh. So in this case, look what's happened. You've gone sideways. It turns out to be a D in the 5-minute chart. Think daily, weekly, monthly, although it's 1 minute, 5 minute, and 10 minute. And the 10 minute has gone to an F, where you've got to be careful, but it could be an alternate count, because this could also be an instant restart. Look, within 3 bars, you went from D to E. That's E/A, F/B maybe. Maybe there's a 2-click session here. Who knows? It's an amazing market that we're in. All right, I've done that. That's live to show you exactly what's going on. So Robinhood, as I say, went to an E. There's no instant restart because it took 1, 2, 3, 4 bars to break out. That doesn't mean to say you couldn't get a down arrow and up arrow, because all the technicals are positive. The on-balance volume was a clue that you were about to pull back a little bit, and you have. So this is something 66.91. I left side, right side price time match that I said should be in May, where it retests the 66.91 area that was made in February. We'll see if that's going to happen. 1 penny above 66.91 starts a leg F in the monthly chart. But wait a minute, don't you have a Chapman Wave instant restart in the monthly chart? So this could be E/A, F/B. I don't want to get too carried away. I'm just saying that's the technique. It all fails if you take out lows that were made recently. And in this case, for Hood, it would have to be a nick under 45.56 to 45.55 or lower. Says, oops, you've negated that as a chance of you have to start a fresh buy signal. Whew, a lot of talking there. So let's just go to, I'll go back. Lilly, I didn't get to Eli. No, I didn't get to Amazon. So let me just do Eli Lilly, did that peak E. 200 period moving average gaps up, goes over it, goes down, and it's turning down. And this buy signal failed at a peak, C. So that's a C minus because it took it out. Monthly chart's the dreaded H pattern. That's the pattern I was talking to you about before. It's this one right here, the Chapman Wave methodology. whoops, there it is, that it goes straight down after peak D, E, or F, and it comes down, rallies and fails at a peak A or B and takes out the left side low. Oh, you've got to be real careful. Look how many times it's done that. Look at that, 1, 2, this held. So this is a much bigger one right here. So Eli Lilly, just be careful. It's a great company, but right now, I don't think it's really in the sweet spot. That's really what I'm looking at. So there's your dreaded H, went to a peak. That's still an A. That's an A, and now it's failed, took it out. This is, be careful. If Eli Lilly at 719 takes out 700 support, that low that was made right here. See, that's what I'm saying. This is a very selective rally. It's broadening, but still selectively. Look, 677.09. Closes under that. That's a big problem for Eli Lilly. The upside has to break above 770. Then it's a 1719 right now. Okay, let's keep going. So that was a question about Eli Lilly. I'm going to look at Amazon. I was asked about it in my show, and I forgot to look at it. Amazon is coming back a little bit. It went to that peak D from the low that was made about 160, screams up to this level with a doji candle in a leg D. Wow, you always have to be careful. 214.84 was the high on the 13th, and here it is underneath that gap low. That's usually not a good sign. It says 200.11 is the 9-period moving average, still positive. 200-period moving average and the 14-period moving average are in the 196 area. I'd just be real careful. And that's what I'm saying about the selectivity. Because, look, Microsoft is held very well. It's gone with the gap up after the earnings. It's gone from 344.79 around about the 7th of April right up to 454 today. And it's climbing. And it's over the Chapman Wave inside track repellent zone. Remember, we were looking at gold, GDX, and it held it, and it's trying to bounce up. I think it's going to retest it. This one's really positive. We do own it from the 338 level, and there it is, breaking resistance to the Chapman Wave falling axe. What's that? It's another technique that I have right there. Right? So you make a high. Usually it's at a peak DEF. You make lower highs and much lower lows, and then all of a sudden it finds support. And then it turns around and it makes this cup formation or a V-shaped formation, takes out the upper declining cone or expanding cone resistance. And that means each peak after that, it could keep hitting until it takes out the previous major high. Whoa, a major high, that would be 468.35. Only 14, 15 points. You could do that in a day sometimes. So this is very positive for the monthly, but the technicals are still pretty darn weak. The technicals in the weekly chart have improved tremendously. The daily technicals are fabulous. So Microsoft looking very good. I'll be back in about, what's the support level? 441 right now. I'll be right back. Basil Chapman sitting in for Steve Rhodes. Hour, Dow's up 86, S&P's up 7.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, Basil Chapman sitting for the hour. That's Steve Rhodes is here. He's on vacation. So we're looking at Apple down up 25 cents at 212.58, making this kind of double top. We had 260 back in December and slumps down to the 170, just under 170. So it's coming back, but I'm just saying that that whole leadership area, we've rotated. We're into something else that's really important. What is important? Look, the XLF, this is the S&P Financial Spider Fund, has just gone to, it's not an instant restart, but it's gone to an E, all right there, the chapter wave methodology, E, F, and that could be an alternate count, but it's an F for now. But look at that leg A in the monthly chart. So I just wanted to show you this chart if I can right here. Yep, there it is. So, first of all, that cup formation is really important. Look what's happened. You've got the cup formation in the 1 minute chart. You've got retesting that previous high D, and if it goes higher than this, I'm going to call that a G/C in the 10 minute chart. That's really important. So let's go back to what we were looking at here, and this is what I wanted to show you. This has been a bellwether for me. This particular chart. There's just two prices. There's the XLF Financial ETF or fund in pink, and the SPY in blue, and it's a monthly chart. And this move here was a perfect in the parlance of the technicians here at TFNN. You remember Tom O'Brien used to talk about this all the time. This is the lightning bolt pattern. The A to B pulls back and then starts another move going from C to D. Well, look at this. The A to B, not Chapman wave notation, peak A's or trough A's, nothing. This is the A to B, the actual strength of the line up. This is what Larry Pesavento talks about all the time as well. Look at this. This price up is exactly to the penny almost. This price up here. This price down, the B to C, was almost to a dollar, within a dollar of the price here. Now look where we are. The XLF is closer to an all-time high, and the SPY is getting close as well to its all-time high. This is fabulous action. I mean, this is a chart that, to me, you just need this chart. Where the financials go, if there was going to be this big depression, there could still be at any point anything. But right now, if there was going to be, going into this period that people were so negative, going to the April 7th low, if there was going to be a major, major crash, financials would have been down. You remember what happened in 2007 and 8? The financials got clobbered. So this, to me, is a big positive in the overall market. Got that out the way. Now the next thing. So look, here's another. Peak A. This is live. Just want you to see it. And that is parallel high. So that can't be an A because it has to, be a B. It has to be 25 cents higher. And it's not. This is the E-mini 1 minute chart. Look at this. 59.20. 59.20. My eye picked it up because I've just done millions of these things. So this goes to B, and this goes to C right here, B, and that goes to C. 20, yep, there it is. This is now an E, and I have to now call this a G/C. There's a really good chance that it's like a two-click session. What is a two-click session? I talk about this a lot, where when the 9-period moving averages crosses positive, there's a real good chance in the 10-minute chart that you could have a two-click session. From that low, you could keep going all the way through to maybe when it turns pink. Or you get a notation or something tells you, hey, that's great, I can get out. But it's one click and you just sit there waiting for the negative action before you make a decision. I love that. All right, let's just go back to this. And what we're looking at the XLF right there. Look, gone sideways for a few days. Leg E looks really nice. So I've been talking about this for a while. The 500, S&P 500, and the IWM, the Russell 2000. So that relationship, I want to see the Russell 2000 not necessarily lead, but really start to garner tremendous strength. It hasn't done that yet. It's got a 50% retracement from the 244 double top high from November of 2021 to the high of November of 2025, having gone down to the 161 level. And now it's good. It doesn't look great in the monthly chart. It's improving. Weekly chart is improving. By the Friday, I might be able to see if the MACD is able to close the 0% line above going positive. I'll be able to give it a buy signal. But this is great action. Now, what we're looking at is the relationship of the S&P big 500s to the small caps, the Russell 2000, IWM, is the same thing that I look at when I look at the XLF. Leadership in the S&P Select Financial, that's got JP Morgan, all those biggies, and Bank of America. We are long Bank of America. We're still long. It's doing really great. This is the longest period we've had it, even though it's pulled back sharply because we got in so nicely. Did that double top. These double tops or double bottoms are amazing. That's why I'm watching the TLT for that double bottom at, is it 50? So what we're looking at, 48.08, 47.98, double top in the Bank of America, pulls back very sharply down to the 33s, and now it's back at 44. Nice action, not great, but very good action. So this is what I'm looking at. Why is the KRE, the Regional Bank Index, although it's done great going from the low in the 47s to 59 right now, it's kind of lagging. But if I use that technique, the falling axe formation, and treat this as a downtrend line right there, I treat this as a downtrend line, and there's the expanding cone formation, there's a chance, let me just make this accurate right there. I like to have it as accurate as possible. Doesn't click automatic, I have to do it. So it's just above it. That's really the first decent sign I've seen, but that 9-period moving average pink has to turn green by going over the 14-period moving average, pushing away from this 200-period moving average that was support, then broke it, now it's resistance, and boom, we've broken above that. So far, the KRE is acting very well. That's the regional, we say small. Believe me, some of these regional banks have billions. They're not very small, but they're called small. S&P Regional Banking ETF is not the XLF with the huge financials, even as Berkshire Hathaway. So this is important. So that's the relationship there. Now, I haven't done this, but the Bitcoin is pulling back a bit. It's down 75 cents. It's gone through. You remember another technique I'll show you right now where I use trend lines to go give you an instant. This is right there. So this is very narrow inside track repellent zone becomes a propellant zone, and that's important with the cup formation. Now, because you've gone 9-period moving average and the weekly has improved, it says that Bitcoin weekly chart has confirmed the breakout in the daily chart and that it's in a buy mode, and that the monthly chart is still looking very good. It hasn't done anything. It's still in a buy mode. So I love this action with Bitcoin because I think it's become an alternative to other areas in the commodities, you could say, but basically in the currencies. So it's become so much more legitimate. So it's acting very well. 110,975. I said peak E, double top. I think it's going to take a breather, and it certainly did. It came down all the way to the 75,000. It's now all the way up at 103,600. This is very good action. Now the weekly chart is saying, is it able to hold any pullback to 97,000, and is it able to break to a new high to go to the 107,000? That'll be very good. I'll be back in a moment. Basil Chapman sitting here for Steve Rhodes Hour, and my service is the opening call daily newsletter. I'll be back in a moment. Dow's up 94.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
So I had a question about quantum. This is the Defiance Quantum ETF, trading at 84 right now. It's doing really nicely. It is a little doji candle yesterday, and it's at a peak D if there's no new high today. But look at the breakout. This is that falling X formation that we were talking about a moment ago in the other stocks. Look, broke out above it. That's really positive. It says the next level of resistance will be 86.26, the high of the week of the 21st of Feb. And then you go to the 90.75 area. That looks to me like a target in this particular phase. We'll see if there's a double top or not. Now, we have AIQ, which is the AI artificial intelligence ETF. We had it for a long time, added just recently. It's up really nicely. It's down today 24 cents at 40.75. I have a target of 42.78. That was the high, all-time high, back in February. And that says maybe next week, maybe it's a little too adventurous, is the Chapman Wave inside wedge target repellent line. So by Friday, 41.39 is the resistance. And it goes up, and it says maybe I should have extended that. Maybe by the 23rd or so of May, the whole week I've got, next week, there's a chance that it gets to that 42.78 level. And then we've got to analyze whether the V-shaped pattern is making a double top, the inversion of that dreaded H pattern. So before we wrap up, as I say, sitting for Steve Rhodes, I'll be doing my show, The Target Conditions Hour, tomorrow between 8 and 9 o'clock in the morning. And the next week, I'm going to be out from Thursday through the following Wednesday, back that following Thursday, the 29th, I believe, of May. I am not sure I'm going to be able to do it. I'm out in the West Coast, so 3-hour difference makes it 7 o'clock. I don't know if everybody will be happy with me waking them up at 7 o'clock to do my show. We'll see what happens. But in the meantime, I'll do my opening call newsletter, and we'll see what happens. And on Friday afternoon, tomorrow afternoon, we'll do an overview, as I say, an hour long, maybe even more. An overview is like a webinar on what we have, what we're looking at, what we would like to still get, what's worked and what's not working. And if you look at something like a fantastic stock like Thermo Fisher, which always does fantastically, it has gone from the 630 area down to today of 400. See, this is very selective. It is broadening, but it's still very selective.